Hi guys, welcome to section 8 of our Trading 101 course. In this section we'll be talking about trading platforms, what are the best criteria you need to look out for when picking a trading platform, and some of the different US and UK trading platforms out there. Let's get straight into it. Hi guys, it's Enny aka the Knock Trader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and to hit that alert button to get alerts on all my latest videos. This is lesson 8 of our Trading 101 course. If you haven't seen lesson 1 to 7, I'd recommend you going and watching those in order first before you get to this video. As I said before, we're talking about trading platforms in this video. Remember, I've got a Discord group and a mailing list as well, so check the description section below for the links to both of those. Let's get straight into it. If you guys have seen some of the other videos I've made where I review trading platforms, then you already know that I'm going to go through 6 main criteria that I think are important when picking an online trading platform. If you want to check out those videos as well, I've got a link in the top right hand corner where I'll just give you some of the UK trading platforms I think are good, and then I break down their pros and cons of each platform. The FCA is the Financial Conduct Authority, and in my opinion, being regulated by the FCA is probably the most important criteria you should look for when picking a trading platform. FCA regulation provides a level of protection when it comes to customers' money, such as things like the Financial Service Compensation Scheme, which means that if a broker goes bankrupt and has to liquidate their assets to pay off creditors, your capital is protected up to £85,000. Your money is also ring-fenced against creditors and is kept in a separate account to the company's money. 24/7 support is also a very important service that a good trading platform should provide. This can be through emails, phones, or live chat. This is because as we are now in a 24/7 trading environment where asset classes such as forex pairs, which can be traded 24 hours a day and 5 days a week, and cryptocurrencies, which can be traded for 24 hours a day, 7 days a week. As customers, we need the same type of support to cover all hours of the day. I also want availability to as many markets as possible. There's nothing worse than wanting to trade a specific stock or bond or forex pair and going to your trading platform to find that they don't have it available on your trading platform. So having availability to as wide a range of markets as possible is very important when picking a good trading platform. So margin requirement is all about the amount of money you need in your account to enter a trade. Now, the higher the margin requirement, the more money you need in your account to make a trade. So if one trading platform has more competitive margins than others, that means that you need less money to enter the same trade on the better trading platform than the other. Now, this used to be more important or relevant than it is today because ESMA regulation that went in 2018 meant that specific margin requirements are set for each asset class, and all of the trading platforms in the UK and in Europe for the most part all have to stick to a specific level of margin requirement. So this isn't as relevant as it used to be because the margin requirement for different asset classes are all the same across all trading platforms so that they can comply with ESMA regulation. But I'll go through this in more detail in a later slide. Now, the last 2 criteria I think are especially relevant for new traders. You want to have access to a demo account. Now, I think this is really important, especially for new traders, because if you go straight into a live account, you're more likely to blow your account up and lose all your money. But if you have access to a demo account, then you can practice trading in an environment that mimics the live market without actually having real capital at risk. So you can practice, get better, and then when you get comfortable, you can actually switch to a live account and actually start trading with real money. But if you don't have access to a demo account, then you can't do that, and it forces you to go live straight away, and the likelihood of you losing all your money is higher if you go straight to live without ever practicing on a demo account. And finally, the criteria that I think is also important for new traders is low minimum stakes. So what that means, especially for spread betting, is that if the minimum amount you're allowed to bet on a US equity, for example Apple, is £2 per pip, that means that you'll probably be forced to make a level of to trade a certain amount that you're not comfortable with. But if you have the flexibility of being able to trade 50p per pip or 25p per pip, that provides higher level of flexibility in your trading volume, and you can choose a smaller amount to risk. So this is just a slide on some of the UK and USA trading platforms out there. This is not an exhaustive list, but these are just some of the better known ones, both in the UK and USA. You've got IG, Interactive Trader, Intertrader, City Index, CMC Markets on the UK side. You also got some platforms like Trading 212. There's a whole host of trading platforms out there. If you do your research, you'll find some other ones as well. In the USA, some of the more known ones are TD Ameritrade, E-Trade, and Fidelity.